Hi, my name is Dion, and this is the Bullion Vault. How are you doing, Willem?
Well, and yourself, Dion?
Very good. So it's episode 33, and again, I think we've been quite a lateral period within the bullion space with regards to gold, silver, and platinum over the last week. Prices have been fairly lateral in their movement, but I do believe that that's kind of always, as I say, that quiet before the storm. It's a building of momentum. And your thoughts?
Yeah, we're seeing some fluctuations, but it seems to sort of just correct itself all the time.
Yeah.
We're still looking at gold sitting $3,330 odd roundabout there. We're looking at platinum, silver sitting at just under $38, and then platinum at 1,319. So yeah, it's been quite stable. We're seeing dips and rises, but overall it just seems to be a holding station for now.
Yeah, and again, that's exactly speaks to that lateral movement. And again, as you say, as it increases slightly or drops, there's that correction. And again, I think it's that quiet before the next big movement, the next big jump. Just out of interest, I mean, we always discuss this. And if I had a silver crystal, well, not a silver ball, a crystal ball, and I could know the pricing of everything, I'd be infinitely rich. But again, we speak on pricing, and we've spoken a number of times on this actual show of like what the initial predictions for 2025 were, and we said 3,000 kind of looks good. It would peak and then pull under, and it smashed through 3,000, 3,100, 3,200, 3,300, and then it's kind of stayed there, as you said. Silver was a little bit slower. It was under that, the mid 20s, and then slowly built up, and then did that smash through to the 30s, and then again stayed in the low 30s, and then over the last 4 months, it went into the high 30s, and now we're going into that whole new territory. Platinum, on the other hand, has been probably the metal of the year so far from a growth perspective. If we look at, I think it was 2022 and
I
20,
think it was 23.
yes, 23, where platinum was the top performer. Again, it's showing massive growth, showing a lot of promise. Again, we look at the pricing. We do a lot of market research. We look at the different players in the market. We look at the different analysts, and even from your top hedge funds, top investment houses, and top industry experts. They all put their colors in, saying this will be the price. And suddenly, mid year or first quarter, there was reviews. Halfway through the year, there were reviews. So where are we right now?
It's quite funny because I've never seen quite as many reviews and quite as many revisions as I've seen this year. Yeah, it's as you said, if we had the crystal ball, we would be the richest people to have ever walked this earth. But even with the best people, with the sharpest minds in the financial space, you can see how well or how often they get it wrong as well. And yeah, it's an interesting one. I just found this new review by Nikki Shields from NKS yesterday, and it's quite interesting that she predicts that we're going to see 3,600 in gold this year. That's a high, and then she predicts a 3,200 average for the year. Now, if you think back to January when we were talking, oh, if we hit 2,800, it's going to and he'll be sitting talking about 3,300. It's very interesting. So, yeah, and I mean, you mentioned silver, that's also been doing well, and we always say silver follows gold and then outperforms it. So it's a bit slower to take off, but once it does, it's usually percentage wise that ramp up is much, much bigger than gold's. And we're always talking about gold because it's one of the most prominent metals on the planet. It's always in your face. You listen to the radio during news and they give you the gold price, etc., etc. So silver goes a little bit unnoticed, but it's had an absolutely fantastic year, and it has outperformed gold because that's the other thing that Nikishil says. It's gold has had a phenomenal year, but it still won't outperform silver or platinum. And platinum is this the stealth ninja creeping in there unnoticed, and it's had an absolutely phenomenal year. Now, in terms of silver, she's predicting that we're going to see $42 an ounce, and the average annual price is, according to her predictions, $38 an ounce, which is roughly where we're sitting now. Um, and as I said, this is a revision of her predictions, and that is up 10% from her initial estimate. So then we're looking at platinum, and there we've got a prediction of $1,350 an ounce. Now, it's not a stretch from where it is at the moment. We just said, what was it, $1,320 an ounce. So it's not massively up from where it is at the moment, but it is still up 38% from her previous estimate for the year. So that just tells you what an absolute surprise we've had from platinum. To revise it by 38%. I mean, gold was revised by 8%, silver by, what was it, 10%, and then platinum 38%. So it just tells you exactly how much of a stealthy move that platinum has pulled this year, and how much it's actually surprised everybody.
Yeah, again, and we've spoken about this before. I mean, we saw JP Morgan, they were coming out saying $4,000 per ounce for 2026 for gold. I saw now with HSBC, they also came out saying, but theirs was a lot more conservative. They were also speaking in the range of around 3,600 down to 3,100. So they're kind of hedging their bets on both sides, saying, if it drops, well, we told you, and if it goes higher, we told you. I think, to be honest, that's pretty much fence sitting. But interesting enough, again, we have spoken on this. I do believe that we probably will see gold going to that 2,500 and sorry,
3,500.
3,500,
Yeah, yeah.
and probably stabilizing around that towards the end of the year. We know traditionally now we're going into that period of October where, if you go through all the different decades, that's when the markets are the most volatile. So again, with the general status quo of the economic world right now in the different countries, there's a lot of instability, there's a lot of uncertainty, and that plays into a lot of market uncertainty, and in turn, that rush towards gold. So personally, I do believe that we will probably sit around that 3,500 and probably push into that 3,600 by year end.
Yeah, I definitely think 3,600 is not out of the question. I mean, if we look at the year, usually you see this peak climbing at the end of November into December. So, you know, have we seen the highest that gold's going to go so far this year? I doubt it. I think we're going to see higher in December, sort of towards the end of the year. And I think we're going to see still a bit of a boost from all the metals. We were talking about silver and that $50 mark. As soon as we cross the $50 mark, then we don't know what it's going to do. It's never been there. It's untested grounds, uncharted waters. So what's going to happen when we get there? We're still a bit off, but you know, nothing is impossible. And I mean, yes, as you said, we've got estimations from 3,200 to 4,000 from two top companies. So it does show you how volatile, how unpredictable things are at the moment. And you're 100% correct. We've got a world that is very volatile at the moment. We've got an economic situation that could go either which way. It could completely collapse. It could move away from the Western influence of the USA should countries decide to ditch the dollar, or make a move away from everything that's going on there at the moment. So it's unpredictable is, I think, the word that sums it up the best right now.
100%. And I think what's more important here is that on these lateral periods, there's not excessive peaks and dips, that there's kind of that corrections, and it's just moving more laterally. And again, and from previous experience, that's that building up of pressure, that's that building up of tension, and again, that will then force that next big jump. What's interesting here is, and I was just looking on an article, and silver, they're saying by 2030, and again, let's be honest, we're a couple of years out from that now. We on the latter end of this decade. And that's the scary thought, that we are now going into the second part of this decade. And there we're looking, and I mean, they're saying that $30 to $50 range. I believe it's going to be far sooner. I think that silver probably will go over into the 40s. And as I think Shelley Shields,
It's actually Nikki Shields.
yeah, sorry, Nikki Shields. And what's interesting is she does come out, or they come out saying around $42. I think that's pretty much par for the course. Platinum, it's interesting. I still think platinum's got a lot more growth. I think from the last years where it was really down and it was down and out, it's showing great growth within the investment space. It's showing great growth within the jewelry market space. And that speaks to its overall growth.
Definitely. And I mean, she predicted 1,350, which frankly, easy, I think. Easy. But I think the more important thing, the more significant thing here is that it's been revised by 38%. That's 40% up from the initial estimates. And that just goes to show you how much it has actually outperformed, how much it has surprised everyone, including some of the top analysts in the world.
Yeah, and again, it speaks to where we are. It speaks to the world we're in, and it speaks to that instability and that uncertainty. And with an American presidency, with a foreign policy that they currently have, it speaks to a lot more uncertainty, because there's the diplomacy that should be there is not there, and it's me for me and you for you. So there's a lot of the separation. It's interesting that Donald Trump has been having direct talks with Putin, showing that there's some emergence of his foreign policy coming into play.
Yeah. Then on the other hand, you look at the tariffs. It always reminds me of, but on the other hand, Darren. But on the other hand, we look at the tariffs that are aimed at some of the developing nations, and if you look at the highest tariffs, it's directly targeting BRICS countries.
Yes, so you talk about that India's the top of the pile. I think it's what, 50 odd percent tariffs, or
Yeah, it's 50 odd percent. I'm not sure. We can have a look at that.
yeah.
But yeah, it's massive
And then
tariffs.
the second's Brazil, and we third in the line.
We're third in line. Yeah, India is sitting at 50, Brazil is sitting at 50, we're sitting at 30, and three of the letters in BRICS sitting right there. I mean, we don't see China on there because obviously it's not counted as an emerging economy anymore. And I think China just says, bring it, we can take it,
They're in a different position, because ultimately, over the next probably 3 to 4 decades, they will emerge as the top economy in the world, and they are going to surpass the US, and that's very clear that is coming, and coming at a rate of knots.
And so yeah, it's interesting that, I mean, what is the size of the population just in those top three countries? It's absolutely massive. We're talking about India, which has, I think, if I'm correct, the largest
Yeah,
population in the world. And
it's I think it's over 1 billion people, or
oh, I think it's more than that. I think it's probably over 2 billion, but we can we can look at that later. But what I'm trying to get to is it's interesting that the BRICS countries, especially the emerging ones like India, like Brazil, like South Africa, are the ones being targeted with these massive tariffs. And that sort of kind of does, show me that there is fear about it. Because why would somebody go to all the trouble to go to those lengths to try and dissuade a country from joining BRICS?
again, we know that the dollar, or as the reserve currency in the world, is under threat. We know that it's under massive pressure. The dollar's performance has not been great. Hence, the actual growth in gold is directly linked to the weakness in the dollar. And we've seen even the strengthening of the rand is a relation of the weakening of the dollar, not so much the rand getting stronger, but a weaker dollar. And I mean, what's interesting is you even look at with South Africa, as you mentioned, we the third highest, being nailed with tariffs of 30%. And basically, that works out. And this was done at the beginning of the year. The forecast on our GDP was around about 1.8, and they've revised it down to 1, and now it's been revised down to point under the decimal in on actual growth.
Yeah, I mean, Standard Bank calculated that for every 10% increase in tariffs, we're going to lose 0.1% of GDP. Now, you look at 0.1%, whoopee, whatever. It's a lot more when you actually think about it, that we only have a growth of 1%. So now you add 30%, actually it's 1.1% that the growth is forecasted for.
Yeah, it was revised to that. Yeah.
Yeah, and 30% tariffs, that's 0.3, and that brings us down to 0.8.
Yeah.
And that's a significant, that's the problem, is the growth is so low that 0.3% makes all the difference in the world.
And again, that then puts pressure on the government to deliver as far as SA Inc. on revenue, because we speak of the old thing, revenue versus expenses. And if you're not meeting if your expenses exceed your revenue, you run a deficit. And that, what does that mean? We then go and try acquire more loans and get ourselves into more debt, and that whole spiral and that nearing or narrowing, closing to a sovereign default becomes a more and more real reality.
The problem is we're so deep into it already, because, I mean, if you look at the loans that South Africa has taken on just over the last few years, it's billions and billions of US dollars that need to be paid back. Those loans are going to come in. We're going to need to pay it back. And I mean, we've already spoken about it. A massive, massive percentage of the government's revenue goes directly towards paying just the interest on those loans, never mind actually repaying the loans. And that's where the problem comes in. Sovereign default happens when you get to the point that you can't repay the interest on those loans anymore. So you actually, in effect, losing money every time you repay the loan. So that's basically what happens. And then you go into a sovereign default. And as we've talked about Argentina many, many times on here as well. And the impact of that sovereign default has been absolutely devastating to the economy.
And to quantify what you're talking about, is for every rand that South Africa SA Inc. spends or has to use, 20 cents goes to repaying the interest on those loans. So 1 rand SA Inc., 20 cents to the interest on those loans that they've procured over the period of time.
And it's the interest. It's
Yes.
not actually repaying the loan. It's
No.
just covering the
The
interest. And
interest.
that's the scary part.
Yeah, and I think it's so important to mention that, because we're not even dealing with the issue here, because the loans remain, that pressure remains. And of course, with poor growth that we are experiencing, I mean, a country to have point of a percentage in growth, we're going nowhere, and we're going nowhere very quickly. And we've also spoken at length about that unfortunately, the government, or the hope of the government of national unity, was that we would start to stimulate certain areas within our economy, and it hasn't. It has not. And the problem is, we're in a position where the debts, all those things are increasing. I mean, I've heard some good stories, and people I know directly that are consulting to Joburg City, and they're looking to clean out the mess. But the rot is so deep and runs so far and wide, is to correct it, like with the American economy, like what Trump's trying to achieve in trying to create internal growth by creating, stimulating internal industry. It's not today. We're talking decades to change that or to reverse that.
But the bigger problem there is that internal industry is not that easy, because what's happening right now, you look at some of the countries that are the biggest exporters to the US, and you look at some of the biggest companies, they've got plants, manufacturing plants all over the world. So, they can easily say, right, instead of manufacturing in South Africa, we're now going to manufacture in Chile or wherever they might have another plant. And they're just going to import it from the countries where they have plants that has a lower tariff. So, are we going to spend billions and billions building a new manufacturing plant in the US to produce there and get rid of the tariffs? Or are we just going to say, okay, well, if you're not willing to buy a 30% or 50% tariff, well, then how about you buy at 10%?
Yeah. And again, I think, and this is very close to what we're busy with, is export market, and the current position within our space is it's a wait and see. This is an administration. This in turn will be addressed. I know that from a South African perspective, the Department of Trade and Industry, they are already trying to see how they can get certain sectors a better trade tariff deals, and that will come. But again, the other side of it is we know that it isn't an administration. If the Democrats come in, it's a complete reversal or change of what we would see or expect.
Well, yeah, I mean, there's not much we can do to influence the US political sphere, but we've highlighted the doom and gloom, and we also need to look at some of the more positive aspects of all of this. And the first is that, we talk about the tariffs a lot, and yes, it's going to have a massive impact on a lot of industries in South Africa. I mean, the citrus industry, because we have an alternate growing season to America, they import a lot of citrus fruit from South Africa. However, we're competing with Peru and Chile on that, which has 10% tariffs versus 30% tariffs. So obviously, they're going to import from the other countries. However, the by value, only 8% of exports go to the American market from South Africa. And I mean, it's a significant chunk, but it's still not, if it was 50 or 60%, then yes, we're absolutely boned. I don't have another word for that.
Yeah.
But it's 8%. So, it's not the be all and end all. And it's also not saying that all trade to America is going to cease immediately.
Very, very simple. For like I said, we as a company, we are looking at foreign markets. The US was almost was what we were focusing on, with the UK and Europe as the total basket. All we're doing now is saying focus UK, Europe first. We wait and see, we build momentum, and then we can cross over into that market. There are alternatives, and that's what you're highlighting here.
Definitely, and that is one of the things that the government is actually looking at is the alternative markets. Now, another thing is that minerals and metals make up a significant portion of the actual products that we're exporting to the US, and as they're saying, it's likely that they won't be impacted by the new duties because they're going to be classified as critical imports by the United States. So there's a little bit of relief on that, but we're looking at some of the other things that we've had a inflation of 3%. We have a jump in platinum prices. Now, as you know, we are the biggest manufacturer of or mining
Producer, yeah.
producer of platinum in the world. And I mean, that's 45% already this year that the platinum price has gone up. So there is a bit of positives for some of these industries, but yeah, there's still quite a bit to be concerned about.
Yeah, and again, I think what like we're really highlighting here is I think there's a lot of like focus on it, but the truth is it's also there are alternatives. We as a country, we need to look at growth. So personally, as a businessman, for me, you got to look at other markets. You got to look at other ways of trying to get to market, all the markets that are going to best serve you from a price perspective, from a margin perspective. At a 30% margin, we out of it. We could not compete with anything within this sector. But realistically, and as you said, there is definite talks within government. They are talking to the Americans to make sure that we can get a better thing. And as you say, it's going to be reclassified as product that is needed. That it's no longer the general product. So let's see. I think it's going to come, and we can then decide exactly what will come of that. But for me, we look elsewhere. We look at other opportunities.
Yeah, and I think that that's probably something that's been long overdue. You get comfortable saying, "Oh, we've got America locked in. We're doing our trade. We're getting our income from there, and now all of a sudden we need to actually look at the rest of the world, which honestly isn't the worst thing that could have happened."
Yeah, and again, I think AGOA, which was the foundation of our trade into the US, uh, kind of made that comfortable. And as you said, it becomes easy. And there are a lot of industries. There are a lot of industries that will battle and have massive job losses because of it. So I don't say it flippantly, but there are other alternatives, and we need to be creative as business in this country. We got to be the front runners. We cannot sadly rely fully on government for support. So we got to be creative, and we got to find the answers that are going to best serve us and in turn serve our country.
Definitely. Eventually what it boils down to is businesses looking for opportunities in other countries, exploring other markets, opening up those channels, and yeah, that will in turn boost the greater economy of the country as well.
Yeah, and just on other things, we did mention silver. Was there any thoughts on silver with regards to what there's expectant of this breakout? I know that we had actually mentioned it a while last week, where there's definitely a lot of hype about silver. That the industrial demand is up. We've spoken that for the last 3-4 years that it's over exceeded supply. We also say that if you look at the history side, that traditionally silver follows gold and then surpasses gold and surpasses it by quite a margin. Your thoughts?
Well, you pretty much said it all. But yes, as we have said many, many times, it is an industrial metal, and therefore there is an industrial demand, especially with things like solar panels, etc., etc. In the green energy space, there is a massive demand for silver, and I think it's what 4, 5 more years that there has actually been a deficit in silver production overall. So it's no surprise because this it's like a spring that's been coiling, 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 and it's been squeezing, and all of a sudden it needs to let go. And I think we saw a part of that already this year. We're sitting at $38 an ounce. It's quite frightening when you actually look at it. I was going through some some previous pricing that we've done, and I was looking at silver at 550 rands an ounce.
Yeah, listen, I'm smiling because where silver's currently sitting at just short of 1,000 rand an ounce, in dollars, as we mentioned, mid $37 an ounce, is I wouldn't have anticipated that. We've spoken up silver for a number of years, and we've always been very big fans of silver because of its accessibility, because of its price range, that it is accessible to the man in the street, that it is a form of currency, protection for currency devaluation, which the rand does suffer to global currencies. So we've always said that silver is definitely that position within the man in the street, and it has relevant value to them.
Definitely. We always talk about the rand is stronger. The rand is stronger, but at the moment it's more a case of the dollar is weaker.
Yeah.
So our 17 instead of 18 rands to the dollar means a little bit less. Yes, it's good to see that the rand is being resilient despite everything, but it's a little bit less impressive when you consider that the dollar is down against all of the major currencies. The dollar is, I think I said a few, maybe last episode or a few episodes ago, that a lot of the rise that we're seeing in the gold price, in precious metals, isn't necessarily that the metals themselves are getting more expensive. It's that the dollar is actually down. And because it's being denominated in dollars, we are seeing a bit of a rise in the price of gold, of silver, and of platinum.
Yeah, what's interesting is that South African bonds there's been a massive upsurge in buying of bonds internationally. And again, that speaks to that volatility and that people within their own countries are not benefiting from their bond markets being quite stagnant and slow, that South Africa presents an opportunity. And hence the rand stability has been based around that also, that there's been quite a strong buying of our bonds that does give that stability. But if we go and see performance of the rand, it devalues and it loses value to currencies and has consistently done that for more than 30 years.
And that's why you need to hedge a portion of your wealth out of rands. And as we've said many times, precious metals is the easiest way to do that because it is denominated in international currencies like the dollar, like euros. I mean, I don't know what's going to happen should the dollar collapse and lose its status as a world reserve currency. What we're going to say then? Is it going to be gold is 3,000 euros to the ounce? It's going to be interesting to see what's happening. And right now, we are in a bit of a holding pattern. We need to see what is going to happen here. What's going to happen with the US tariffs? What's going to happen with, as far as other countries looking for opportunities in other markets? Where's all of this going to go? It's a bit of a knife edge, and it could go one way or the other. We're going to have to wait and see.
Yeah, and again, what's interesting is we are in that position. We are in that holding period. And for me, it's a matter of time that things are going to start to show themselves. I do see that what Donald Trump's been doing with regards to Russia is very clear and very intentional. That he's kind of showing that he wants to create some stability, but he forgets that Russia is also part of the BRICS. The big fat R in that acronym. And again, what does that speak to the dollar having its strength? And we've spoken about this before as a reserve currency, and all currencies have a life cycle. And what was 300 years ago is no longer now. I mean, we saw the pound sterling had its time as reserve currency, and we've seen all currencies prior to that, when that country or that economy was dominant, their currency was a reserve currency. I spoke earlier about China. We know that China is now emerging to become the biggest economy in the world, and with that, the actual changing of the demographic, where majority of Chinese people 50 years ago were below the breadline, were proper working class blue collar people. They now moving into that middle working class white collar sector, where they want great goods. They want more of your fancy whiskies, your fancy things, because they're now having extra income that's allowing them to start buying those things. So there's a big group of population within China that has the currency to go into the world and start to buy things. Whereas 50 years ago, that was a complete different picture.
Definitely. I mean, 50 years ago, if something was made in the USA, you go, oh, yeah, I want that. That is absolute quality. And if something was made in China, you would say, heck no, I don't want that. Don't bring it near me. But, and there was the stigma about made in China, and that has endured for a long time. And there's still some people that will blatantly say, oh, you don't buy Chinese rubbish. But look at the things that China is producing. It's no longer Chinese rubbish. You look at Chinese cars, there are some absolutely magnificent things coming out of China right now. And I think we are seeing that swing from, where China was always the underdog, making the cheap, nasty stuff. We see them actually becoming a producer of quality goods now.
Yeah, and I think that's a change of guard, and it's imminent. We know that it's building its momentum, and that the time of the US being that dominant. That's why you mentioned of the BRICS countries, the ones that have been really targeted are the emerging economies, which don't have a foot holding to actually say no, sorry. Whereas China is very clear. They say, really, you want to do that? Fine, we'll do this, and they have the clout to do that. Russia also, to a degree, has that position. Yet the other participants in BRICS, especially those three countries, one of us being one of them, is we're not in that position. So you can see the targeted attack on that. And it's interesting that China is treated very differently because the US knows where they stand and the potential that China is becoming.
Yeah, and I mean, you just mentioned Russia. I think at the moment they're sitting in a position where they're simply saying, I'm sorry, we've got so many sanctions against us. Every country in the world has got sanctions against us. You want to give us 10% tariffs, whatever.
What would that be in Russian?
Spasiba.
Is it?
No, I think that's thank you.
Just on a light note, we are, we both Formula One enthusiasts, and we've hit that mid part of the season. The summer holidays are finally ending, and from next weekend we back into Formula One, back into the mode of things. It's the Netherlands Grand Prix. We've seen that there's a lot of talk and distraction to 2026 with the changing of the power units and the from more battery driven and so on. It looks like there's a couple of manufacturers quite ahead there. It looks like Mercedes is coming out as a very clear dominant one for next year. But it's interesting. I mean, poor Verstappen still sitting uh, with Red Bull. I said it a long time ago that I believe that there is a definite move towards Aston Martin. My son, who's a big Verstappen fan, tells me I'm crazy, but I still believe that that's probably on the cards at some point because Aston Martin is going with Honda. And I do believe that there's a very strong connection with the Verstappens and Honda.
There's a bigger reason to move to Aston Martin, and his name is
Adrian
Adrian Newey.
Newey, yes.
And yeah, that's the thing. Now, you mentioned the power units, you mentioned the batteries and everything, but one of the more important things is active aerodynamics. And Adrian Newey is the absolute god of aerodynamics. So I think Aston Martin is looking very, very strong for next year. Red Bull are in a heap of trouble. They've lost Christian Horner, they've lost Adrian Newey, and it right now it's more like the slow cow.
Yeah, and there's a number of other top guys that are also leaving or are about to leave, and that's all from that IP that brains trust that got Red Bull to where they were. I mean, I was going back to stuff when old Vettel was with Red Bull and he won the first world championship with them, and you look at from that to where they've become. It's been phenomenal for a non-production team. Where you got your Mercedes and you got your Ferraris where they have unlimited resources. Red Bull had to find a power unit. Red Bull have had to do all those things, and yet they've done it well with the likes of Adrian Newey and so on.
I think the team that Red Bull had was absolutely phenomenal. They've overcome a lot of challenges. I mean, power units. Um, they had absolute genius in charge of the car development in Newey. They had Horner leading the charge from the front and doing an absolute brilliant job of it. Now what have they got? They've got the best driver in the world, and that's it.
Yeah, my son would say that, and he reminds me, but I remind him who are the current champions or the leaders right now. And I nailed my colors at the beginning of the season, saying that it would be McLaren. To me, I think Piastri has been nothing short of a revelation. I think this is his season. Lando Norris, I've always been a fan of his, but he doesn't have that killer instinct that a Verstappen or a Piastri has. I mean, I've only seen Piastri get upset once, and that was after the Grand Prix where he had to give Verstappen the place, and he literally was seething. But other than that, he's remained ultra cool. And when it's come down to performance, he's been the one that's really stepped up and produced the actual goods.
No, definitely. I mean, I think it sort of swung from, everybody had backed Norris because he's got the more experience, because he is an excellent, excellent driver. But Piastri is as good as Norris with a cleaner, a calmer, clearer head. And I think that's going to make the difference. It's literally this championship is Piastri's to lose.
And that's exactly the case. So I was just looking at our executive producer on that one, and she's taken notes. So Willem for Piastri to lead, I personally agree with you. I do think Lando has a bigger fan base in the sense that he has been around, he's exciting, but he's also volatile. And we've seen it where there's a pressure moments and he's kind of imploded or done irrational things. He still has an opportunity, and I think it's going to go to the wire between. So I think this is McLaren's to win, and either driver to win or lose,
Honestly, I think McLaren has already won it.
pretty much. But in saying that, I think Ferrari has been disappointing.
Very much.
I think Leclerc has kind of been second fiddle to Lewis.
And
What
yet
is
producing the goods.
Yes, and that's exactly what I was. And sadly, he's the one that has been delivering, but you can see the frustration. You can hear it on the odd comments that we as viewers get to hear, that he's not a happy guy, and yet he's still world class, and he's still consistently being their top performer.
Well, let's hope that Ferrari pulls the platinum and zooms up by 48%. That would be lovely.
Well, there we go. We tied in F1 with precious metals. And again, I think it is exciting. We are at that halfway point. Let's see where the season goes. But I think we're both very clear on that one.
Yeah.
Anything else in closing?
I think at this point, all I want to say is if you enjoyed the content, leave a like. And if you want to see more, be sure to hit the subscribe button. And we'll see you guys in the next video.
Thank you. Take care. Bye.